So glad that all of you are here, and I'm so glad, Patrick, that you asked me to come and share a few humble perspectives with the audience. I'm going to start with two topics today. Why Southeast Asia? Why is this amazing region so interesting? Why now? And where are the next $20 billion unicorns going to come from in Southeast Asia? Well, why Southeast Asia? Southeast Asia, in some ways, is Asia's best-kept secret. It's the most underappreciated part of Asia today. 650 million people, 9% of every man, woman, and child on Earth lives in Southeast Asia, and we're growing incredibly quickly. But something that isn't fully well appreciated, but incredibly timely today, is not only is Southeast Asia large and exciting, it's also one of the most strategic parts of Asia for the next 15 or 20 years. There is no debate that we are in the middle of a complete realignment of trade relationships between China and the United States. And over the last 2 months, the Chinese stock markets are down 13% in US dollar terms. And in fact, most of the other stock markets around the world are also down. Guess who hasn't fallen? Southeast Asia has been completely flat, undisturbed by the trade war in US dollar terms. In fact, Southeast Asia's outperformance relative to the Chinese markets and relative to major economies around the world is remarkable over the last 2 months. Now, it's not just that. Over the last 19 years, since the very beginning of this century, Southeast Asia has actually defied the common wisdom that emerging markets are high risk. I love to ask people, as almost a parlor game, if I were to ask you to rank China, Germany, Indonesia, and Vietnam in the order not of how quickly they're growing, but how volatile that growth has been. What's the standard deviation of that growth? I've only had one person in the last 2 months give me the right answer. Almost everybody gets it wrong. Let me show you the data. This is the data for the volatility of GDP growth since the beginning of this century, 19 years worth of data. And as you can imagine, some countries grow at 5%, some grow at 8%, but there's a swing year to year in how they do. This quantifies that swing. And guess who's been less volatile than all of the economies you see here? Southeast Asia. And within Southeast Asia, there are incredible stars like Vietnam and Indonesia that have had remarkably low volatility. In fact, almost no one I meet outside of Southeast Asia, when I ask them, would Vietnam be less volatile than China, gets the answer right. It has been. Vietnam's been growing at 6 or 7%, plus or minus about 1% for the last 19 years. Now, it's not just the real economy that's producing great outcomes. People are making money in Southeast Asia. Now, what I'm going to share with you here took a lot of work for us to create, to share with you today, but it's a very interesting drill down into how venture capital returns have been in different parts of the world. Now, there have been about 7,000 venture capital and private equity funds globally since 1995. And on average, to their LPs, the people that are giving them the capital to invest in all of our companies, they've delivered about 13%. Let's take a walk down data lane and segment that into the Asian venture capital and private equity firms and the non-Asian. Well, Asia's done better by about 1% a year. And over 20 years, that really adds up. Now let's slice Asia one step further. Technology inside of Asia and non-technology. Well, technology's done a hell of a lot better. Let's take it one step further. Technology growth versus technology buyouts. There's been a tiny bit of seed as well. Technology growth has done really, really well. Now, inside of technology growth in Asia, let's look at everything other than Southeast Asia. It's done pretty well, 15%. But look at Southeast Asia. Southeast Asia has delivered to the limited partners, the people that make all of our companies possible, the ultimate buyers of our shares, almost 20% after all the fees they pay to the VC firms. This is incredible and also an underappreciated story. Very few people realize how good the results have been from Southeast Asia. I'll give you one last data point. This isn't just in the private markets. What you're about to see is a list of the most successful large tech IPOs worldwide last 10 years. You can go off to Bloomberg and pull down the data. Every big IPO in the world for the last 10 years, any country, and we measure one simple thing. How is the stock done since the IPO? What was the net promoter score for the investors that bought into that IPO? Some go up and some go down. Well, the two best IPOs in the world last 10 years in tech have been Ceridian and Atlassian. One of them's from America, one of them's from Australia. They're both enterprise software companies. They've done extremely well on an IRR basis, 60% plus. And that list continues down, and there's another, give or take, 100 names that come after this. Alibaba's not done too shabbily. It's number 13 in the world, number 2 in Asia. Hong Kong Trust has done okay, 15% returns. But who's number 3? In fact, who's the best consumer IPO in the world in the last 10 years in tech, and the best Asian IPO in the world in the last 10 years in tech? Turns out it's a Southeast Asian company. I've had the great fortune and great honor to be part of this journey for many years of my career, but more importantly, this is a victory for Southeast Asia, not just for C. A Southeast Asian company has delivered 63% returns to the global capital market. That means one specific thing. There is a demand for more. When the next Southeast Asian company goes to the NYSE or the Hong Kong Exchange or the NASDAQ, people are going to ask, can I do this again? Because I made a lot of money in the first one. And I can't emphasize how important this is. When my colleagues and I had the great pleasure and honor and great fortune to ring that bell 2 years ago, in some ways, it wasn't about us. It was about all of you. This opens up and reconnects Southeast Asia to the US capital markets in a way that hadn't happened for almost 25 years, since the 1990s. So where do we go from here? Well, part of what's exciting about this moment in time isn't just the fact that IPOs are coming back. Part of what's exciting is that Southeast Asia is going through a very special moment in time that my colleagues and I like to call the unicorn zone. What do I mean by that? Imagine for a second you could look at affluence on a per capita basis, per person. How much do people make per year? And because the numbers can start very small and get very big, let's look at it on a log scale. So at every rung of this ladder, you're doubling your annual income per person. You can start off very low and eventually become very high. Now, obviously the richest country in the world is America. America is already well past $56,000 per person, and they're way past what we would call the unicorn zone, which is a zone between $3,500 and $7,000. Now, interestingly, Japan is about a generation behind America. In fact, Japan today is about where America was in 1991, and you'll see a pattern here. Korea is about a generation behind Japan. Korea today is about where Japan was in 1994. And Korea is the most recent country to have gone through the unicorn zone other than China. China's a generation behind Korea. China today is where Korea was in 1990. And China's just recently gone through its unicorn zone. India hasn't gotten there yet. It will. We always joke that, put a reminder in your calendar for January 1st, 2029. Don't be late. India's going to enter the zone then, and it'll have a wonderful 10-year period. But in between China, which is already through the zone, and India, steps Southeast Asia. We are right in the middle of the zone, and we're going to be there for about 10 more years. And this is an incredibly special thing. Why is it special? When you're at the India part, around $2,000 per person, only about 5% of that income is discretionary. The rest of it's just covering the basic needs of life. But when you get into the Southeast Asia zone, 15% becomes discretionary. Now bear with me. India to Southeast Asia is about a doubling. 5% to 15%, it's a tripling. So you actually have a 6x increase in discretionary income from the India zone to Southeast Asia. And that's why we call it the unicorn zone, because that massive increase in spending power makes all of our companies possible. And in fact, when you think about the size of companies you can create when you're at different stages of the unicorn zone, it's not linear. You get significantly larger companies, predictable, repeatable unicorns when a country is in the unicorn zone, and not just big companies, lasting companies. Now, we wanted to prove this to ourselves and learn more about it, so we went back through history. Now, back to that previous page, the last big country to go through the unicorn zone successfully was China. Well, here's how China did it. China was in the unicorn zone from 2003 to 13, and you know what? The vast majority of their value in tech, 70% of $2.5 trillion, went public in those years. Korea was in the unicorn zone a little bit earlier. The vast majority of their wealth went public in those years. And even Japan, it's been a while for them, but about a third of their value went public in those years. This is the point. There's something very special about being in that moment of time. And we've been in it for 5 years, and we're going to be in it for the next 10 years. And it is an opportunity you do not want to miss, because before it and after it, things are just a lot more slow. Now, this is a very unique dynamic in Asia's high-growth markets. America's different. Let me show you America. America has reliably stamped out great tech companies for a long time, but even America shows a pattern. If you look at the chart below, this will show you when, in terms of the IPO date, did today's almost $9 trillion of American tech wealth go public, and you'll see a pattern. There was a pretty slow journey up until 1980. It really picked up from 1980 to 2004, 2005, and then it's kind of slowed down a little bit since then. Only Facebook has been a big win for America since 2004. In fact, if you just look at the velocity, it really had a moment from 1980 to 2004. And that's very interesting because the kind of companies America produced are different than the kind of companies we produce here. Just as America's moment is slowing down, and just as China has left its unicorn zone, and just as the trade war is beginning, Southeast Asia's moment has only just begun. And that's an incredibly exciting time for us. Now, what's going to happen next? What do we do with all that? How do we actually reach our potential? Well, an interesting statistic is that when a region gets to about 10 or 11 unicorns, things begin to pick up. This is the cumulative number of unicorns in the US. Notice the trend? Right around 10, 11 unicorns, it inflects upward. Same thing happened in China a year later. And here's Southeast Asia. We're now at about a dozen unicorns. And that means that not just because of the capital coming in, not just because of the fear of missing out, but think about all the employees in those first dozen unicorns who will now want to become founders of the next 20 or 30. That is an incredibly special moment. It's something that we've been preparing for at least a decade. Now, where will those unicorns be? Well, one thing to think about is how big they might become first. This is a really interesting way to look at it. This is how big American tech companies were in value relative to American GDP. And you'll see a very nice upward journey. Today, it's almost 40%, 45% or so of their GDP. Who's been following America? Well, China, of course. China has caught up in a very meaningful way, but it's been pretty consistently 10 years behind. In fact, China today is about where America was 10 years ago. And you know who's about 10 years behind where China is today? We are. So Southeast Asia today is about 10 years behind China, and China is about 10 years behind America. Now, what would happen if we were to catch up to China? It might be too much to ask for us to catch up to America in 10 years. We might get there in 20. But let's say we catch up to China. Well, today, we're at 2% of our GDP. China's at about 16, 17. So we've got a bit of a catch-up to China. Let's say we do that. And let's say we don't even assume our GDP rises. We're just going to stay steady, but we're going to increase our tech sector. That means there's $426 billion of public tech wealth that will be created over the next 10 to 12 years. That's enormous. It's extraordinary. In fact, it's one of the single largest creations of tech value in human history, and I believe it will happen here in Southeast Asia. The question is where? I was chatting with Patrick a moment ago, and I was chuckling because just as our previous speaker had a bonsai, we think about the world in similar ways. Think about every tech business model as falling onto one of the three branches of a very simple old bonsai tree, a tree that goes back decades. Most of the world's tech companies, by value, fit on branch one. They're companies that, by and large, tend to be founded in the US, sometimes Europe, and they win globally. We know those companies who they are, AWS, Google, Facebook. When people say the Facebook of Thailand is Facebook, that's what they're getting at. There's a second branch of companies that tend to win on a very local basis because of regulation. We don't have very many of them here. They're mostly in China, a few in Russia. Where we win is in category 3. We call it branch 3. Businesses where the network effects are real, but they're regional. They're not global. It's probably too high a mountain to climb to create the Microsoft Windows of Malaysia, but it is not too high a mountain to create the Alibaba of Southeast Asia. Who are examples of branch 3 companies? Well, if you look at our region's history, for the last 20 years, quietly, methodically, but very successfully, our region has been stamping out branch 3 companies. In almost every case, the original noodling idea comes from America or Japan or China, but mark my words, these are not copycats. They take a pretty good idea and deeply localize it to what we need here in Southeast Asia. And with the exception of 1 or 2 companies, none of our winners had more money or more programmers or more data or more natural advantages than their international competition. We win in these categories not because of the law, not because of our resources. We win because we're local. and we out-execute. This is what Jack Ma meant when he talked about being the crocodile in the Yangtze. We win because of our insight and our local execution, and we have a natural advantage because these are Category 3 businesses with a home court advantage. And it makes us ask the question, well, gosh, that was the last 20 years. What's coming up next? Where will all of you in this room create the next billion-dollar company? Well, the good news is we can do a little bit of what we call a time machine analysis. Let's look at how China made $2.5 trillion of wealth. They did it in 4 basic steps. They first built out an entire wave of what we like to call plumbing companies, infrastructure, basic telecommunications, basic data centers, laying the table for everybody else's success. Then there was a wave of horizontal web. In fact, in every part of the world, rich or poor, it's ads, it's games, it's travel, and the very first beginnings of e-commerce, they did that too. Then they had specialty e-commerce, which adds a video and a social lens to the evolution. Think about going from a department store to a specialty retailer. And finally, 4G was so prevalent that they were able to create a massive, ubiquitous, totally immersive online-offline hybrid environment for food delivery, for spa services, for payments at a pushcart all around China. This is the playbook. In fact, if you think about how they did it, tier by tier by tier, what you're seeing here is every single Chinese tech IPO in the last 25 years. It perfectly mirrors the 4 layers of the layer cake. And brick by brick, they built themselves one of the world's most impressive tech ecosystems, and the vast majority of those companies were branch 3. Yeah, a handful of the companies, Baidu, a few others, sure did benefit from the Great Firewall of China, but most of these companies won the old-fashioned way. They worked hard, they built a great business, and they used their local home court advantage to their favor. So this is the recipe book. This is the playbook for how we will follow. And we'll do a few things on our own. We'll adapt it to our needs. This will be capitalism with Southeast Asian characteristics, as the pun goes. And we can measure how far we've gone. Well, so far, we've created some fantastic entrepreneurs in the plumbing layer. We've done a bit in mobile telco. We've gone on to do semiconductors. We've had some television. We've had the beginnings of advertising models. Where's Patrick? Somewhere in this room. And we've sort of caught up to the middle of the chart. In fact, by the numbers, we are exactly 10 years behind China. No surprise there, because we're exactly 11 years behind China in affluence. This is incredibly powerful. The most interesting half of the page hasn't been built out yet. Wow. In fact, just walk with me through the math here. If that was the China playbook, and this is how much we've done, well, A minus B is C. This is where the next 20 multi-billion-dollar unicorns will come from. Some of them are going to be in entirely new categories we don't yet have a public company in. Some of them, like the green ones, we've already got 1 or 2 public companies, but there's room for more, and there's room for more specialization and innovation. But mark my words, this is a pretty accurate forecast of our next 10 years in Southeast Asia, and I'm excited to know who in this room is going to build these. Now, I do have a hunch. I'm kind of curious which of you is going to start these, but I can give you one guarantee. This guy is going to do 5 of them, I'm sure. So with that, I'm going to pause. Thank you very much for your time. I look forward to spending more time with you offline. Thank you.